What's up, everybody? This is Steve with Altcoin Buzz, and today we're going to talk about an emerging topic going into the 2018 calendar year. But before we get started, I want to preface with the statement that I am not an accountant, so this is not actual personal tax advice. This is just kind of bringing news to your attention in case you guys haven't heard of it yet in relation to proposed tax law changes in the United States and how those might relate to cryptocurrencies. So just keep that in mind before we dive in. So we're just here to give you some advice peer-to-peer to let you know that if this wasn't on your radar, you got to dive into it on your own. And if you have valid concerns about how this may affect you in terms of taxes, I can just recommend that you speak to your own accountant or your tax preparer to plan out your taxes moving into 2018. So basically, the way that the laws used to work, there's what they considered a 1031 loophole in terms of exchanging one cryptocurrency for another, virtual currencies as the IRS refers to them. And being able to exchange something like Bitcoin for Ethereum and then Ethereum for another type of altcoin used to not be a taxable event. And it was just kind of expected that you would pay taxes when you withdrew your money and took it out into US dollars, taking it back into Bitcoin or what have you and cashing out. So the trade for trade of what was considered a Likekind transaction, trading one coin for another, used to not be considered a taxable event. But we're trying to gather up as much details as possible to confirm whether this 1031 exemption for virtual currencies is coming to an end and may only apply to physical real estate transactions and not for cryptocurrencies, which would mean that the IRS would then be considering cryptocurrencies to fall underneath the same umbrella that stocks and bonds and other types of securities exchanges would fall under. And there are certainly some similarities between what cryptocurrencies are and what those are, but it's been a long-standing defense that a lot of these cryptocurrencies are not in fact securities. They're tokens. They're monetary in value. So here's old news dating back to March 25th, 2014 on irs.gov. So the IRS basically had made some statements surrounding how virtual currency operated like real currency and that trading one for another was basically a like-kind event. So anytime you cash those out, gains would then be considered to be wages, ordinary income for an individual. So that's how we've been treating it, right? And that doesn't go to say that everybody who's been cashing out on their cryptocurrencies out into their fiat currencies has been abiding by the regulations and reporting their income. And that's probably where Coinbase has had a large investigation lately and lawsuits, what have you, from the IRS trying to get records to find out who are the worst tax evaders there and get their real identities to find out who hasn't been reporting it. Because I've read some information where of all the people who used Coinbase last year, there's really like hundreds or maybe just a couple thousand of people who actually filed any type of report of taxable income. So with a lot more people on that exchange, it's drawing scrutiny. So, the Wild West days are certainly in danger. We'll say that. So let's dive also into another bit of information. And this is from all the way back in 2008. So, there may be updates to this because as the IRS states it's historical, so they're just referencing it. But this is what like-kind exchanges are under the Internal Revenue Code section 1031. So basically, gains that were deferred in a like-kind exchange under this section were considered tax deferred, meaning and not tax-free. So it meant you will pay taxes, but you'll pay taxes at a future date, at which time you release the property, aka sell the final property. So this type of 1031 exchange was often considered to say, well, there was no official ruling stating that the cryptocurrencies were in fact a security or stock or bond, so it fell into this sort of loophole where it wasn't quite regulated because it hadn't necessarily been defined. And that's where we could buy Bitcoin, then buy an altcoin and not consider a gain. And this is really strange because this may affect altcoins more so than it might affect some of the primary tokens. If you go on Coinbase and you buy a bunch of Litecoin and hold on to it, you're not exchanging it at that point. And then when you cash it out, it'd be a pretty simple calculation of your gains or losses. But let's say you go buy that Litecoin and then you take it on to like Cryptopia and you buy an altcoin. Well, the purchase from Litecoin to altcoin, let's say that's going to fluctuate in value, as you know it will. The gains or losses there now have tax implications just to purchase an altcoin that you couldn't have purchased on a primary site like Coinbase. So this really is going to affect people who buy those. And if you're into day trading on cryptocurrencies, you're going to now fall into the same tax implications or very similar tax implications, it appears, as people who day trade stocks. You don't have the SEC regulations on pattern day trading and what requirements are in your portfolio in terms of being allowed to do that. But if you're trading, just keep in mind you're going to be potentially paying ordinary income, or at least being required to report ordinary income on every single transaction. So if you buy a coin and you go up 20% and then you report that income to the IRS, that 20% gain, as ordinary income, that's going to be added to your taxable income, and then you have to look at the new tax brackets that are also coming out in 2018, because there's been a huge, as they call, tax cut and jobs bill, which, whether it's controversial or not, it's definitely going to take place one way or the other. So just keep in mind that doing so for small gains isn't necessarily going to be beneficial to you guys. You can only hope that they're looking at the ledger difference in the gains and losses in terms of US dollars and not the total asset in and of itself. So just be aware. We're not here to tell you guys any sort of advice on how to avoid taxation. What comes is going to come. And we're not here to also spread this as FUD, which would be fear, uncertainty, and doubt. We're just here to make you guys aware of it. So another interesting thing, and if you want to look at it at congress.gov, they've actually got the entire 708 pages of this new proposed tax bill that I believe has been passed. So you can do a quick search for the term Likekind or 1031 if you want to. And then we suggest, if you want to read it yourself. But basically it says here on page 396, if you get that far, that if section 1031 applies to an exchange of properties, the basis of the property received in the exchange is equal to the basis of the property transferred. So this would mean if you're taking Bitcoin and selling it for Bitcoin, from one exchange to another, moving it from wallet to wallet, that is literally the same property, and it's not going to be considered a taxable event. So you will pay your network fees and transaction fees to the exchanges and whatnot, but that's not considered to be the same thing. But they're not going to consider Bitcoin to Ethereum or any other coin or any combination thereof to be considered a like-kind exchange, because they're going to start recognizing them supposedly as separate properties. So this would be different than if you had say bought like a townhouse and then you wanted to exchange that for business commercial property. That's property for property, of which has currently been sheltered from taxation. But in this case, they're saying that anything other than exchanging one thing for itself is going to be different, which I guess that there's some obscurity there then, or you can make a case for some obscurity on what ERC20 tokens would be, since they're all kind of based off the same type of tech. But be aware of that. So this tax shelter, this 1031, appears to only now, moving forward, be literally defined as a tax code that will apply to physical real estate transactions. So just beware. So let's take a look here. I also noticed something here about a particular date. So we look at the House bill, and it says here that the provision modifies the provision providing for non-recognition of gain in the case of like-kind exchanges by limiting its application to real property that is not held primarily for sale, which would be meaning an investment. And that effective date is going to go into effect here at the end of the year in just a few days on December 31st. But let's look at this note. I'm going to highlight this. So let's read this highlighted section. Ooh, all right. It says, however, an exception is provided for any exchange if the property disposed of by the taxpayer in the exchange is disposed of on or before December 31st, 2017. Or, this is a big or here, the property received by the taxpayer in the exchange is received on or before such date. So this could have some really strange implications on what the market might do in the next couple days, given that it appears from my readings, this is me, not a lawyer, I'm not an accountant, but it looks like if you purchase the altcoins prior to the December 31st, 2017 date, and you receive those as payment from somebody, that they're not going to be that they're still going to be in the exception? Up for debate. If you're an accountant, you know the ins and outs of it. Please comment below. And certainly if you guys find any more credible sources, like legitimate sources and not just, regular news media, comment links to those below so we can all come together and get to a consensus on what all this means. If there's new updates, any more hard concrete evidence, we'll of course provide these to you guys, but stay tuned for some more updates on this, and just beware, if you're not in the US, this probably doesn't apply to you, but also be aware that your government may also follow suit. If US sets precedents on taxation and recognition, then you might expect that in the near future that your other country may also come down with the same type of regulation. This is Steve, as always, from Altcoin Buzz, signing off.